I would also like to show the relationship or the relative strength between the equities, gold versus the equities. So this is a chart of gold versus the SPY. And as per what I have studied what I was making mention of John Murphy's book of Intermarket Analysis, normally as per the basic concept and inverse relationship between equities.
Hello and welcome back to Praise of the Lord. I'm your host today, Flávio Lemos. On this show, we sit down with the master of the market to learn the lessons that sharp numbers alone can't teach. Before we unlock today's market secrets, our guests generously share their valuable time and experience. If you appreciate their insights, hitting the like button, subscribe, and commenting with what you learn is a wonderful way to show that gratitude and it helps ensure these important conversations with fellow traders and investors. Your engagement makes a real difference. For such a special occasion, I'm not alone. I'm thrilled to be joined today by co-host Mari Damasceno. Mari Damasceno is a certified technical analyst and trader with 6 years of experience in the Brazilian financial market. She specializes in day trading futures on the US dollar and crypto too, and swing trade commodities, combining technical analysis and behavioral finance to help traders achieve consistency, discipline, and risk management. Welcome, Mari.
Thank you, Flávio. Thank you, Foram.
Today, we are diving into the application of technical analysis across some of the world's most dynamic markets, bridging insights from India to the United Arab Emirates and beyond. Our guest is a leading voice in this space. She's Foram Chheda, founder of Achar Analytics. Foram is a CMT chartered holder and a 7-registered independent technical research analyst in India. Her work provides discipline, actionable research on India and U.S. equities, derivatives, and international ETFs to a diverse clientele including high net worth individuals, non-resident Indian, and professional managers across India, the UAE, and globally. She expertly blends tech analysis, relative strength, and market structure, and is a frequent sought-after commentator on major Indian financial media like ET Now and CNBC. Foram, it's a pleasure to have you join us from India. Welcome to Traders of the World.
Oh, thank you so much. And it's such a pleasure and honor to be here. And really, thank you so much for such a wonderful introduction as well. I'm so excited for this. And when we just scheduled and just marked our calendars, and I was so looking forward for a conversation where it's not going to be me speaking or we would be, but there's going to be so much of learning for me as well. And that's what something that I'm looking forward for.
You cannot afford to miss this. Don't go anywhere.
You ever wondered what truly connects traders from Tokyo to London to New York? You just need to learn the language. That language is technical analysis. Understand its signals, and you'll understand the world. Welcome to Traders of the World. Here we skip the jargon and just figure it out together.
Ladies first. Mari, please.
Thank you, Foram. Let's start from the beginning. Can you tell us about a moment or the aha moment or spark that ignited your interest in this wild world of financial markets, and specifically pulled you towards the charts and sometimes crypto squiggles or technical analysis?
That's a very good question that you started off with. I would say CMT or the word technical analysis just came in out of the blue as I was working for a branding company, and it was more into manufacturing, so never was technical analysis that I was really associated with. However, a friend of mine who was running the company there had already kind of diversified himself, and he was reading lots of books, and there were lots of books in the organization that I started reading off. And that was something caught my eye and started reading one book, another one. And it just started off the journey there. And I said, yes, this is something where I would love to do it, and probably I'm going to enjoy it. And of course, very important and rationally, if you look at it, that I could have been very independent and working for myself. So that is something kind of motivated me even more.
Foram, what's your background?
Well, I graduated in commerce, and then I immediately started working because I was yet not very clear what exactly professionally I wanted to take up. And that's how I started getting into the advertising, more of a branding field. And I was like, yeah, let's learn. So I started learning from accounts to drawings to designing, everything. And that's where technicals came into the picture. And I spent nearly 3 years working there. And then I was very serious and keen to take up technicals professionally. So I joined as an intern in a brokerage house. And over there, I was just looking at what I can study professionally, and that's formerly known as MTA. And now it's the CMT Association that I came across, that I started looking into it and browsing. And maybe in 2013, I couldn't connect with many people as we are connected socially now. So I was like, yeah, let's give it a try. And started applying for the level 1, started looking at markets. And then I realized it is so big. There is so much to learn. And maybe I've just started, and I felt I was a little late to start learning. But at the same time, if you look at the positive side also, it's never too late to learn.
Yeah.
So
Yes.
I was like, yes, why not? It's okay. If I've realized now, I can yet push myself to do it. And that's how I started off. And I yet remember those days of yet appearing for level 1, level 2 exams and working together. So early morning, 5:30 to 7:30, study, then go to work, come back, again study. So yes, I think that got the ball rolling. And yeah, then got a job as an intern, then as an advisor. And that's where the entire thing changed, that the technicals, you can grow so much that you can become a research analyst, you become like a portfolio manager or an equity advisor or a head of trading desk. So you have so many you can say hats that you can wear. And I just saw that the options were just opening up for me. So that's how then each step at a time has got me here, and yet learning.
You are still very young.
Yeah. How old are you, Foram? I'm sorry, Flávio.
No.
I'm sorry.
How
How
old
old are you?
are you?
Oh, how old I am? I am 35.
Sorry for the question if you don't.
No, it's absolutely okay. As far as okay, I don't look 50, I'm fine. Yes, so 35, and I know it's a long way to go. Lots and lots of things to learn, and that is why, as this podcast also goes on, and I will be learning a lot from you guys as well.
Okay.
Very
And on a more important note, you have mentioned that tech analysis played a key role in achieving complete independence after this previous work experience. And that's what's fantastic. Can you tell us how mastering the charts became your escape hatch or toolkit for building your own path and becoming your own boss? What's the importance of being a CMT charter holder to you?
Oh, in fact, having that CMT charter holder has, or having that designation of CMT has been such a vital role in my professional journey. So as I was saying that, I started off as an equity advisor, and I was yet studying for my CMT level. At level 2, I was applying for level 3. And my organization knew that I was doing CMT. So one is that doing at that time in 2016, in 2013, it was yet new. And then I just was looking at it that, okay, fine, being an equity advisor, I can help the clients. And the organization did see that I was helping the clients at my end itself to guide them with their portfolios or stocks and everything. And the moment it was 6 months up, and I cleared my level 3 of CMT. And it so happened that I finished with my work experience in the financial field, what was the requirement, and at the same time, I cleared my level 3. So, in fact, the my organization promoted me in just the moment I cleared my CMT level 3, and they put me as a technical research analyst. And that turned out to be like one of the aha moments, I would say. Because yes, you are an advisor, and the organization is seeing that, and that the moment you clear your level 3 and you are just promoted technical research analyst, just said a lot that yes, the CMT is holding something. And then to write after my name that CMT is with it's so much of achievement. You feel that yes, you've done it something, and it's like yes, you can be identified as a charter holder. So that's a very proud moment, I would say. And then it's like the journey just goes on, taking every step higher. That okay, you become a senior person, get promoted to another level, and then the CMT. It was just before I could start off on my own. I was leading the trading desk of one of the AI funds, and a boss of mine, he was so clear that he was just looking for a CMT person. And then I really understood that I had been doing on the right track. Maybe when I started off, I was not very clear. I didn't speak to too many people who were charter holders. But now when I see that personal experience itself, that it's professionally works so much, so well for me. And really, it's a proud moment, or I would say more of an accomplishment, I feel. So I am like, yes, you should be a CMT.
Oh, Foram, you are a successful woman in a mostly male field. So many industries are not welcome to women in general. Could you perhaps share a story or reflection without any extremism? We don't need that, but maybe related to gender, maybe around opportunities, or even just getting paid what you're worth. And what's the single biggest of advice you could share with a young woman that want to embark on their own career in this challenging industry? Here is very challenging. I think there is too.
Well, an interesting question, and quite, I would say, can turn out to be debatable also. But to start off with, when I started out, I never really thought about it as, being a woman in a man's world or something. It was just the love for technicals, or how the subject was or turned out so interesting that I was just more curious to know, or kind of just reveal, or unfold the secrets what the chart is holding. So I just got fascinated and just turned out to be more of a learner. But so I would just say that that was not the case. But when it came to a phase where I don't know, probably there in US or across the globe, but particularly here, I have seen that there had been more of a difference when it came to the pay scales between the men and women. However, now things have been changing, and now actually it's been that your skills pay off very well, irrespective of your gender. So now things have changed, but definitely when I was like looking out for jobs or opportunities in different organizations, so there was a bit of, I would say, the men were getting an upper hand, but that's not the case anymore. And I've seen it changing over the years very well over here as well. So I feel it's more about, learning the language of markets, price, volume, behavior in the world of technicals. And one should just do their own hard work, and definitely one can get rewarded. So it's more about, owning your own space through the skills, I would say.
I like technical analysis because it doesn't matter to your gender, to your resume.
Women got the power now. So now the men are damned. So your approach blends tech analysis, relative strength, and market structure. Sounds like a powerful analytic cocktail. Can you break down how these three pillars, let's say, work together in your research kitchen to cook up those actionable alpha generator insights?
Oh, of course. In fact, that's something, like the entire process of normally what I follow on a regular basis, or that's how actually I have written as steps to be followed or the rules to be followed when I am looking at or analyzing markets, any particular market. So one is that I follow more of like what you call is a top-bottom approach, where first I try to understand the overall market structure. So the market structure is basically a big picture of different asset classes that are behaving. So you may have the currencies, fixed incomes, equities, or precious metals, how they are placed. Now, this is where the interesting concept of intermarket analysis also come in. And when I was studying for a CMT, and I had come across a book by an author, his name was John Murphy, and very interesting book where it was such an easy explanation of every relationship between the different asset classes, which helped me to understand that, it's not only equities, but it's beyond that. And it's such a huge world. So this just helps me to identify where actually the leadership is and where actually the money is going. And once that's clear, I move on to the next step. And if equities are showing some strength, then I will break it down into major market indices. That is where the RRG, the relative rotational graph, plays a very key role in the process. So that really helps me to understand which market is in the leading space, weakening or lagging, or even into the improving quadrant. And that helps me to keep an eye that which market that I should be looking at and where actually the major money is being now diverted and getting into. And that can also help me to generate alpha and create a portfolio. And that is a different way of, kind of diversification. So it helps to open up the entire room and space of what we call now as diversification. So for instance, I would take it as ETFs. They are the best that simplifies this comparison globally. And we take like US markets, they're doing so well. But I also noticed that in the improving quadrant, you had some of these Asian markets as well, be it Nikkei, that is Japan, or Korea, or Taiwan. They have performed extremely well. And in fact, we look at these Asian markets, they have relatively outperformed in the past, I would say 3 or 4 months. So, and on the contrary, we have US markets, which has consistently now, we can see them at record highs, but over the year, we have seen it consistently giving returns. So it gives me a broad perspective that maybe you can have a core portfolio of US, but to capture the alpha, you can start looking at different Asian markets also. So that's something helps you to play around. And I find it quite fascinating that, yes, this is how you can work on these things. And finally, after you get a macro structure aligned, I drill down to sectors, industries, then peers, and then you come to stocks. And when it comes to stocks, it's more where the technical analysis helps me to execute it. So in short, I'll put it as market structure would give me the direction. Relative strength is more about, helps me to focus on certain things. And technical analysis comes into the execution part of it. So it's more about, staying objective, being more disciplined, and constantly identifying where the story is getting unfolded.
Oh, very nice. It's a technical analysis tell us when the timing, but we need to know the whole story. Foram, you work with markets in India, the UAE, the US. What challenges do you see when applying technical analysis in different markets? And what are the unique challenges and opportunities in applying technical such a diverse markets, and how, principalmente, how do you adapt your approach to these different markets?
Yes. Before beginning with the challenges, let's look at some opportunities at the positive side. I would say that because of tracking multiple markets, it has been incredible learning, I would say, an incredible experience. Because as I said, that when the first start, the process is of the top-down approach. And in that, when you bring it down to, for example, equities, which major indices are doing well, or which major markets or countries doing well, that plays a very critical role in it. So when I follow these markets, be it US, UAE, or India, I would say that it really helps me to get a knack of it, that I know, and it's probably I'm aware of, okay, where is the strength, or where the markets are getting little weak, or any of the emerging markets are turning weak. That really gives a bit of a head start and helps you to be more proactive. So that is one of the ways. Secondly, it can also be considered as the flexibility of being a little risk averse, or where you can consider a risk-seeking approach. That is a second way of looking at it. So there are a lot of opportunities than, I would say, challenges. Now, when we talk about the challenges, is the practical aspect. Like there could be some regulatory environments, or there could be a little bit of difference in trading behaviors. Probably in India, it's different. A perception is different. Maybe the mindset is a little different. In UAE, it will be, again, a little different compared to what we see in US markets. And another challenge, what I feel, is the liquidity, actually. So, for example, in India, we may see the markets are extremely liquid. So an easy entry and exit points you can get. Compared to what we see in UAE, there is a bit of difficulty when it comes to liquidity. So you have to kind of be a little prepared that probably the volumes are not going to be as much of what we see during like a breakout from a pattern, for example, what we see the stocks in India. It's going to have a little bit of variation. So the story or the baseline remains the same, but probably it's just the way you're changing your lens a little bit to look at things. And so my core approach doesn't change, but it's just, as I said, you're approaching your perspective, your lens, and your major approach or emphasis is given to a higher time frame. So a book from, I think it's called, it's by Alexander Elder. If I'm not wrong, it was named for, I'm sorry, I forgot the name, but it was more about multiple time frames, and it's like
triple screen, something like this.
So yeah, in the triple screen trading system is where, okay, you're looking at a monthly chart or a weekly chart. It's giving you confirmation, and you're looking at a daily chart for your entry levels. So this entire concept remains the same. It's just that you're looking at different markets, and you are kind of tweaking it a little because of certain challenges.
Olá, espero que esteja gostando da entrevista. A Trade Brasil foi eleita por 2 vezes do Rank Awards 2024 e 2025 como a melhor academia de formação de investidores do Brasil. E ela tem um presente para você que está assistindo esse podcast. 10% de desconto, é só usar esse QR Code que está aqui embaixo e a gente te espera lá, ok? Agora não esquece de dar uma moral pro Flávio. Curte, compartilhe esse vídeo e se inscreva no nosso canal, ok? Até a próxima e obrigado pela presença. Valeu! You talked about John Murphy. John Murphy is like a god for us. He wrote one of small chapter in my book. So let's talk about Intermarket now. Okay. You have shared insights on gold versus equity, pondering a trend shift. How do you use this kind of cross-asset relationships? And right now, what are gold and equities is whispering or maybe shouting to you? What are the relationship telling you now? We'd love if you could show us what you are seeing in your charts. Bring your charts, please.
So this
Yes.
is something, the chart of, I would say, gold. And we have seen an excellent rally, or I would say, an exceptional rally this year itself. So even if you look into it, it's outperformed the equities, and in fact, even from an RRG, we can see that gold is currently very well placed into the leading quadrant, which states that the relative performance of gold is even much better, or gold is relatively outperforming actually the equities. So we can clearly see, and it's been very much visible now. Technically speaking, and more what I follow is the classical method, and which also is associated with an individual life's journey. That we've seen a very steep rise in gold, probably because of different reasons. We have also seen that countries have been buying a lot of gold, be the central banks, for example. Not only gold, but it's been even the precious metal like silver, which has its own usage or demand for in different industries, I would say. So we have seen that the precious metals have clearly outperformed the equity. Now, what you really see in equities right now is it has kind of slipped it a little from the highs, but it's basically more of a retracement, what we say. I have just plotted more like a Fibonacci retracement. Let me just put it as candlesticks. That's something more looks interesting to me. So as you can see that it's more, we've just seen higher top, higher bottom formation, a little bit of consolidation in the middle of this year. And since then, again, a very steep rise. So, however, now there has been a little bit of a tricky situation that one should be looking at buying gold or not. Now, since we had peaked out at levels of around 4,380, there was a very big difference between the prices of the ETFs or bonds of gold and what the actual physical gold price was. And there was a bit of that difference, and hence we can see this retracements or a corrective decline that's coming. But it's nothing that, okay, we're going to see a major crash in this, because now gold is not only looked as like a flight to safety, but people also are well aware how you should be diversifying. So with the purpose of diversification, we may see that, okay, there would be continuous or a long-term trend of gold to remain a little bullish. But as far as the levels, I would suggest that we can see a little bit of cooling period, because we will not see anything just going up. It has to come down a little. And that's exactly what I'm looking to retrace a little before I can take an entry. However, I'm looking at it that from a more concerned way, that one should look at levels of closer to 3,600, where it may coincide with a 38.2% retracement as per the Fibonacci retracement level. And we see this kind of consolidation in the month of June, which was more, I would say, pennant breakout. So again, very simple, classical methods used to analyze. And we can clearly see that, okay, it can retrace, it can retest those levels of, but definitely the long-term trend remains bullish. Now, having said that, I would also like to show the relationship or the relative strength between the equities, gold versus the equities. So this is a chart of gold versus the SPY. And as per what I have studied what I was making mention of John Murphy's book of Intermarket Analysis, normally as per the very basic concept, an inverse relationship between equities and gold or the precious metal. But now things have been changing. There is a bit of variation again. So if we see that from 2015 onwards, gold is just trying to outperform than equities. It's tested in 2016 twice. It's tested in 2020 March when COVID hit. And then again this year we have in April and even the first week of October. This is a weekly chart of gold versus the SPY. And we can clearly see that it's facing to difficulty to, even further go and outperform. So I'm actually waiting for these levels. If it's taken off, we can see an excellent move again, a good momentum rally into gold. Till that time, we may see a little bit of otherwise more consolidation that can kick in to gold. And in particular, as SPY has been, again, marking record highs. So I would like to even share the chart of that. we can see so well that it's just moving in the rising channel. Currently, it's near the upper side of the rising channel. But again, it's showing a bit of relative outperformance. If we just zoom out a little and see that it's clearly, it had to face some resistance in 2023. It broke off, it tested those levels, and now it's again taken off. So it's performing well currently, and we can see the gold is currently seems to be cooling off.
It's amazing.
You emphasize market structure. For listeners, perhaps scratching their heads, what specific elements are you decoding there? How does reading the market structure give you clues, maybe the secret language about where price might be heading at? If you have a sharp example handy, that would be fantastic.
Of course. So I will start off with actually, when I say the market structure, I'm actually referring to the foundation of how the price moves through the different phases, be it from the accumulation or the markup level, then the distribution comes in, and then maybe probably there's a decline. So this entire cycle does not only is restricted to equities, but it also is applicable on commodities or currencies. It's like a repeating cycle. Just probably in individual's life, we see the same thing, that we do have our good days. We probably just plateau out a little, which would be more like a consolidation, or we may see a bit of a fall also in each one's life. And again, we do try and take it back, take the grip of it and move back. So by decoding the structure, I am essentially trying to actually read the story behind the price movements, where actually the smart money is entering or where the money is being pulled out from. So for example, let me just stick to the SPY itself, since we have the chart open. Yeah. All right. So here we have, and which we can clearly see, sorry, yes. So we can clearly see that in 2020, when the markets came down because of the COVID and the lockdown, etc., and then we had an excellent rally coming in, which continued for almost more than a year. After having a very steep rise, we did see a bit of a sideward, more of a corrective phase or a cooling phase of the index. And then we can see clearly that okay, it's taken off again, but it a lot of time. It took nearly 2 years for it to take off those levels and pick up some momentum. And it was never a return again, the price coming in. But the very good part over here is that the recent fall that we saw this year, that was in the month of Feb or March, maybe some of them must have felt that, oh, I should have exited, but now it was too late to exit. But at the same time, it's just reaching and retesting those previous breakout levels, which turned out to make it very interesting that no, it's not an exit. Overall, its long-term trend continues to remain bullish, and thus just wait for some reverse signs. I know it's very easy to say now, but just waiting doesn't mean that you have to look at buying it at the bottom or something, but just wait for some time, let there be some more confirmation, and you can see the rise again. So if you look at from the overall structure of the chart itself, it's like it doesn't say anything is wrong with it or one should look at exiting it. Watch out for some early signs. Keep your probably your action plan in place, and the moment you have certain confirmations, or that's where the technicals comes into the picture, that your execution can be done at the right time.
You use a lot of relative strength. For our listeners, relative strength is when you divide something to two different assets, like you said you did gold divided by the S&P 500. So you can compare the
Yes.
new chart with this, which one is got strength against
Absolutely.
the other. Okay.
Absolutely.
Oh, so relative strength is a key ingredient to your toolkit. How do you specifically wield these comparing stocks to indices, sectors, peers? Is it your go-to sorting hat for stock selection or portfolio strategy? Again, if you could illustrate with a chart, please do. Thank you.
Sure. So of course, relative strength is one of the most critical tool in in when it comes to analyzing or trying to shortlist or narrow down your decision making process. So one is it really guides me to clear my head in case there's a confusion. And as you mentioned, it uses, you can use it across indices, sectors, and peers to get a comparison perspective. So for example, if we look at say, let's look at individually. Since we've already discussed an SPY, so I will look into another one. That would be iShares Australia. Now this is the MSCI for it's Australia. Yeah.
Okay.
Yeah, so we can see overall that this actually the ETF of Australia is at a very critical juncture that maybe if I have to zoom out a little and go onto a monthly chart and see, you can see that since 2010 or 11 onwards, it's actually not done anything yet. Or if I have to just kind of plot the trend line here, and it's just, you can see at the cusp of it. So this is something very interesting, that the reason why I'm showing is that now we go and compare the relative strength of the SPY and Australia, the Australian ETF. So as you can see that it's just on the verge of breaking out, but yet you have to wait for a confirmation. It's yet taking some time. We yet require, since we are this is like a monthly end closing week. So we may get some kind of a clue tomorrow that, okay, where it's giving a closing. So this is what actually I'm waiting for. Now this takes me to create a relative strength of, that is SPY, and I will compare it to and let me just put it as a line chart to simplify things. This, I'm just trying to compare the SPY against the Australian ETF, and you can see that it's just been rising. And you can actually, this gives me a little bit of a thing that, yes, there is further strength. And right now, even if you consider, for example, of an Australian ETF, there wouldn't be too much of strength. Now, similarly, if I look into comparing EY against, I will take as Japan. Yeah. So even when, in spite of Japan right now relatively outperforming, you can just see a consistent rises monthly. I'll just break it down to a weekly one. There has been overall a consistent rising, and it's just consolidating right now because in the past 4 months, we've seen a relative outperformance coming into Japan. So what it tells me right now is that one can continue to have a core portfolio in, if you say US markets, and to capture the alpha is something you can focus into such ETFs which currently are outperforming, be it Japan or Taiwan or for Shanghai for that matter, or even Korea. So these can be considered to capture your momentum base. Having said that, your core portfolio yet remains with the underlying trend that we're talking about in the US markets. So that's how the relative strength, is helps you to decide that where exactly you want to have to be overweight on. And it's just like, sorting your hats. It shows me not just where the market is going, but where the best potential lies within it is something is more important, and it helps.
Okay, great. Your approach is rooted in discipline and risk management, essential survival gear. In volatile markets like India, Brazil, or globally, when the market roller coaster gets going, what are your core principles for building that fortress around capital while still daring to capture the opportunities?
Well, risk and risk management discipline are truly actually the cornerstones of probably every analyst that we'll be looking at. They are like the survival gears for every investor, and especially when it comes in a scenario of volatile markets. So one of my core principles would be protect first and then participate. So I'm more of a risk averse person, and hence I look at protecting first rather than taking higher risks. And before taking a position also, I would define my clear risk parameters at what I'm looking at, how much I'm willing to lose. This is going to be my risk appetite. And while doing so, if I am not very sure about taking up a decision, and while doing CMT is one of the concepts of position sizing that really helped me, and it helps me to play around that, okay, fine, you can try it out. Maybe I just don't have to be overweight, and just the position sizing helps me to diversify and be patient. Either I would be learning my lesson if the call has gone wrong, and if not, at least it helps me that yes, I participated in that kind of a call that I was looking at. So it's more about capturing opportunities, but it isn't about chasing it of every move, but just trying to wait for the proper setups that you are looking for, and where your risk reward ratio is very clear. Now, maybe sometimes when I say it, it sounds very easy, but actually, when we are sitting in front of the screen, it's every individual, be it me or even an intellectual person or um, anybody, would always have a certain doubt, a little, I would say, percentage of doubt within that. Am I doing the right thing? Should I be going this for not? So that doubt would be there, that confusion might be there within. But at the same time, if you are following certain rules, and that's where the discipline comes into the picture, if you are disciplined enough, even if the call goes wrong, it's fine as far as you are within the circle of your risk parameters as well as your rule book about how you want to take that, execute that investments or trade. So I would say rule, structure, and patience is something, the key first, and then it comes to the different another entire process of analyzing.
I like it so much you hear you're telling us about these things, because it's the same things I usually talk about here with the traders here, the investors. So
Absolutely.
for you are familiar on major financial channels in India. What's your magic trick? Because I am a teacher too, as an analyst here. So I want to know what's your magic trick for communication technical concepts so effectively without making everyone's eyes glow over. Oh, it's boring. Or you can talk with the technical analysis without being blasé. I like to have a little of this with me for my people here.
Well, actually, honestly, there's no real magic. It it's just like lots of listening and translating, and some, as I made a mention that some just interacting with you guys, I am equally learning something. And so, as far as markets are concerned, they can be complex, but the most people don't need to see every indicator or a pattern. They just need to understand the story behind it, behind the price, that what really is happening. So when it comes to I talk about the price, it's actually in a very classical method. It would be price and volume. That itself can tell you a lot more than when you add on more indicators. The story itself is of price and volume. So my approach is to break it down visually and conceptually and focus more onto the market structure, the trends, the relative strength, and explain in terms of what it means to take that decision. So as I mentioned about the process that, you look into the market structure, you see the relative strength, and then you come down, draw it down, and your execution comes on the base of your technical analysis. And this can be, compared to your real life analogies, comparing the market behavior with humans, with people's experience. And that's where I think people can relate it and understand it. And it's just not, like approachable, but it's equally exciting, I would say.
Oh, thank you. You work with different types of investors, non-resident Indians, high net worth individuals, fund managers. How do you put on a different analysis hats? You talk about the hats. How do you put the different hats, adapting your research and communication style for such a distinct investor types?
Well, yes, sometimes it can become, it does become challenging. But again, when your core research remains the same, probably you're just changing the lens a little bit. So working with the diverse clients, be it from HNIs to professional fund managers, probably it's just the change of the dialect, I would say. That each audience is coming from maybe different priorities, different financial goals, or the risk appetite, for example. So I just look at it, say, for example, of NRIs or HNIs. I focus more onto the actionable insights and the long-term trends, helping them to, give them more of an informed decision. But when it comes to speaking to or discussing it with certain fund managers, then it's more about the nuance of the relative strength, intermarket opportunities, or the tactical setup. So it's actually you are interacting with the strategies. But when it comes to NRIs or HNIs, it's more about giving them a very clear idea that they can take an informed decision. So the core research remains the same for both the sites, be it the HNIs or be it the fund managers. But probably, as we were talking about the storytelling, that is something just kind of, I would say, translated a little.
All right, let's get your current take. Peek at your charts for the US market, please. Say the NASDAQ 100 or S&P 500, or maybe a key sector. What's your technical perspective of them? Are there any patterns or structures practically jumping off the screen right now? Feel free to share your screen and to have something interesting.
Let's, as I was discussing about the SPY itself, let me just see, my screen has been shared, yes. So when we look at the SPY as an individual, just going, forming record highs every day, what we've seen. Let me just show this visually from a candlestick pattern. And as I made a mention that, from those levels of 480, if we even consider and measuring the returns so far, it's, almost like 43% from the lows. Of course, we will not take it from the lows because nobody would be able to exactly get the bottom of it. But even if we try to compare it from the breakout levels also, it's almost, on an average giving you 13 to 14% returns. And currently also how it's placed is just near the rising channel. So what I feel right now, as far as the US markets are concerned, that they have been trending up very well. They have that momentum going in. However, there is a bit of, I would say, participation from the broader market is relatively less, or I would say the contribution of the participation of this rally is by few stocks. So if you see the Russell 2000 index also, let me just get the, yeah. You can see that, it's just taken off the November 2024 highs. This would be very interesting if I just divide the screen, and that will be interesting to show. Just a minute. Yeah. And this one, we'll keep it as weekly. So when we can see those November highs or December highs in the SPY was already taken off in June itself this year. But here what we can see is that the November highs of Russell 2000 has been just recently taken off. So it actually shows the underperformance or I would say yes, it is an underperformance only. And recently we've seen a bit of momentum that is coming in, or the participation from the mid cap or the small cap space. Having said that, so far it's not showing that much of strength for the index to move up higher. And since technically speaking, it's almost reaching near the resistance level, we may see a little bit of cooling off. And not only technically, but we do have global factors also that is affecting the Fed rate, which I'm assuming is out. And then we, of course, have a lot of nations talking about the trade deals. So that is also going to add on to the volatility. So right at the moment, what I feel is that yes, there is an outperformance. One can continue to hold on from a long-term perspective. However, as far as the trading opportunities are concerned, one should closely watch out for a participation coming in from the broader markets to consider and capture that momentum as well. So I am just waiting for some confirmations for the Russell 2000 index, or the, like a small cap or a mid cap index participation also, which can help the overall index or the overall market to even see a further upward rally. So that's overall that I would look into the US markets.
Foram,
And yes,
wait a second. Place again that last chart.
you want me
The
to
other,
show
other
you
one, yeah, the with the oscillator. Yeah, I saw you in your chart that you are using the RSI and the accumulation distribution oscillator. That is that it? How do you use this accumulation distribution oscillator in your chart, please?
So well, it's more used basically not for the indexes, but I normally check it for the stocks in particular. That helps me to add on more confirmation. So if I'm looking at a stock, say, for example, let me just put it here as Netflix. And if we see at Netflix here, and we can see, and I can probably add in here also the ADO. Yeah. And that will help me to give you a better understanding. Now you can see actually the distribution started off here, and that's basically a breakdown from a resistance point. So which already gave me an indication that yes, there is a bit of continuous sell-off. Now, before even the accumulation distribution is more like a confirmation of already the reversal in trend, the RSI already had indicated that kind of a negative divergence, where if you see that there has been a higher top here, however, what we see on RSI is lower tops coming in.
Yeah, diversion.
Yes, there is a negative divergence that took place. And when this support level, if somebody was looking at it from even a positional perspective, that it did give, this turned out to be like an exit point where already the distribution started happening before that. So it was this rebound was an opportunity to look at reducing your position. So that's how I look at the PO.
Thank you for this clarification. So, what sage words of wisdom would you offer to aspiring technical analysts, especially those in India or the United Arab Emirates, aiming to build a career in independent research with that global flair you possess?
I am more about you just keep me in a room with charts, and I will continuously keep looking at the screen, and be it any markets, and it's more about it's like you're trying to unfold a story of the chart that is in front of you. So I would rather look at any markets of any countries. It's just you just give me a chart and I will just keep looking at it, at what's really happening. Of course, then you do a little bit of reading of what the company is doing, that's over and above your analysis. But definitely it's like it's maybe, I would say, more of passion of learning, and not only for Indian markets in particular, but as I'm exploring towards UAE as well as US markets, it just gives more of a gear to yes, keep moving forward.
Well, I took a lot of notes here, what you said about the market. So for our audience who wants to keep up with your analysis and insights, where are the best spots to find you online? Websites, social media, career pigeon?
I would say I would be mostly available or most active on LinkedIn. And because professionally, you are so well connected on LinkedIn, and even with Flavio, like our conversations started off on LinkedIn, and it was there for quite some time. So I think LinkedIn would be the best place to find me.
Thank you.
Foram, thank you so much for sharing your journey, your discipline methodology, and your unique perspective on bridging tech analysis across global markets. Your insights have been invaluable. Thank you, Maria Damasceno, as well.
Thank you.
Thank you so much. I really
Yeah.
enjoyed this. And really, it's been so wonderful to interact with you, Flavio, Mariano. And I would love to even hear a lot about how you guys have been looking at markets. And even I would like to learn about how you guys are analyzing, because that I told you, every day is learning. And I would just love to know more on it.
Yeah, that's why we made that with the show, to show how others from other parts of the world can use their charts, how they use their unique view about it. That's it for it. So I'm very proud of you two
Excellent.
being here. And so,
Thank
guys,
you.
that's all the time we have for today on Trades of the World. And here's thank you again for Foram and Mariana. Until next time, stay disciplined, keep sharp, and look for those structures. Take care.